Hello and welcome. You're watching BQ Prime, and we are today on site at the JP Morgan India Investor Summit, where we're speaking to the top brass. Today, I have with me Rohit Chatterji. He's head of M&A at Asia Pacific, JP Morgan. Rohit, very good morning. Thank you so much for joining us.
Very nice to be here. Good to see you.
All right, let's begin with what the mood is like after the Fed meet last week and that hawkish stance which has scared everyone off largely. When it comes to the M&A space, do you think it makes things a little tougher, the idea that companies are going to find it harder to get funding, or is this now par for the course after what we've seen over the last couple of years?
I think in the M&A world, what you need is confidence in the outlook. And while the macroeconomic environment is shifting a lot, that tends to be a challenge. But when you're getting to the end of the rate hike curve, people recognize what the new normal is likely to be for the next couple of years. And that gives them confidence in being able to move ahead with transactions. So I think it's actually much better now than it was maybe 6-8 months ago.
Okay. Let's get an overview of your space at APAC. How are things panning out? And we'll come to the specifics of India. What would be your sort of big statement?
So I'd say there are 7-8 big markets. Overall level of activity is very high, unlike in the capital markets, which tends to move in tandem across the globe in general. In the M&A world, every market has a theme that's playing out that's a little bit different. And therefore, while some markets may be a little bit subdued for activity, the others are compensating very strongly for it, India being one of them.
Can we go into a little bit more specifics over these 7-8 markets and which ones you like, and a bit of what's happening in China?
Sure. Let's start with India. Now, this is a place where financial sponsors have done really well over the last 3-4 years. Healthcare is booming. Now, consumer sector is booming. Capital flowing into infrastructure, capital flowing into tech services, which is where people have done really, really well. So the pattern recognition around what investments succeed and how these things are scaled up here in India means that it continues to be a favorite destination for institutional capital this year, and I think it'll continue to be next couple of years as well. China, of course, is a little bit more of a complicated situation right now. The dynamics are slightly different. You've got, now, on the outbound side, the challenges because of intense regulatory scrutiny that they get put through. Domestically, the world is now kind of stabilizing a little bit. People are trying to figure out exactly what some of the policy considerations that have been announced more recently, how that plays out in creating now a more sure footing on consumer demand and the outlook for the real estate sector, because I think those two do drive sentiment domestically in China. And then once now there is some clarity around which way geopolitics might be headed, I think the actual investments coming into China would pick up. But having said all that, the fact is it is the second largest economy. It is full of capital domestically. It is also full of innovative companies that need that capital. So I think once some of these stars align, activity level in China will pick up again.
All right, let me ask that question in a different way, specifically for China. So you have 13 regions, for example. If China was on a scale, where was it 2-3 years ago, and where is it now? Has it slipped down the rankings?
In terms of overall activity in M&A, the answer is yes, quite meaningfully so. I would put this year, Japan, Korea, India as our most active markets. China a little bit subdued, while, as I said, the consumer demand picks its way back up. You've got Australia, which is very active in certain sectors. Metals and mining have been really busy now with big transactions in lithium, copper, things that are going to drive the next stage of EV growth globally. And you have Southeast Asia, which has seen a lot of domestic consolidation because these markets are small, and in many sectors like financial institutions, telcos, and retail, you have opportunities for domestic consolidation, which we've seen play out this year.
Okay. Should we come to the India piece? Everyone wants to know what's happening in India. Stellar year 2022. I think over $190 billion of deal activity. Do you see that momentum continuing? You said this year and the next looks good, but if you can get into a little bit of specifics, what's looking good?
So I think there are quite a few themes at play in India that will continue to play out over a period of time. Firstly, let's start with infrastructure and renewable energy. Institutional capital is looking for ways to play that sector. India has gotten its act together. Now, investors are able to come in, find the right concession structures, scale up their investments, and are actually able to monetize those. So that's one great thing. Renewable energy and the focus and the opportunity to grow and scale that segment is another thing that's attracting capital. Thirdly, in tech services and now increasingly in healthcare as well, the amount of opportunities for some domestic consolidation, but also to continue to build competency with which we can serve the globe, or now to create facilities that can plug into global supply chains in some shape or form, are opportunities that I think will play out over the next 2 years.
So in India, the theme, I would say, over the last 6-7 months, or from the start of this calendar year, with the focus on the broadly defined startup space, has been these talks of a funding winter and a chill, etc., and new age companies. Do you think some of that is easing, or is that a specific problem?
Well, in general, the sentiment for capital markets is improving. Now, the ARM IPO, the Instacart IPO, which we led, have started to open up the sector. They've done well in the aftermarket, which means that the sentiment is starting to firm. Investors will look for the next tech set of where these growing tech companies are. India's got its own cache of those. So I suspect the demand will continue to build, and there will be an opportunity to bring some of these IPOs to the market. Having said that, I think investors are also a little bit cautious about business plans and their pathway to profitability. They want management held accountable for having a more defined pathway to profitability for these businesses. And in some cases, now the shareholders are going to withhold capital in order to enable some consolidation that generates that pathway to profitability to occur.
All right. So you think there's also been a sort of realization on valuations, or a reality check on valuations, which will continue?
Oh, for sure. I think for sure. There was a point in time when the investors were unwilling to do down rounds, or the companies were unwilling to do down rounds. But with the passage of time, people have realized that if you need capital and you need a pathway to going public, you just have to acknowledge that we live in a slightly different world, and access to capital is what continues to help these companies to grow. And at some point in time, you just reconcile with what the mark-to-market view on value is, raise that capital, and continue a pathway to growth.
So reality check.
Absolutely.
Okay. I want to come back a bit, just for a bit, to the sort of geopolitical piece. And a huge story, or I would say a narrative, in the last year or so has been India as an alternative in some spaces to China, as an unwillingness has grown to invest in China, a lot of uncertainty there, and India can be a great alternative destination. Give us some clarity on how clear that picture is. Is it more than a feel-good headline? What is there to it?
I think it's more than a feel-good headline. Having said that, it'll really play itself out over a period of time. Now, I don't think that you suddenly create the manufacturing base to become an alternate destination for supply chain investments. It is a work in progress, but I expect it to play out in one of two ways. On the organic side, there will be more capacity being created in India now by local conglomerates, local houses, as well as by MNCs who are going to start to create greenfield investments in order to create that capacity. Secondly, I also expect that components of businesses that are held in Indian family hands today might change hands, and private equity might own them for the next, I would say, journey in their life, and build on them in order to eventually probably sell them to a strategic investor coming in a few years from now. We are starting to see that happen now. Private equity is starting to take a view on certain sectors, certain assets in the industrial world, in chemicals, in things that would eventually become part of a more mainstream global supply chain.
Any specific sort of sectors or companies that come to mind?
Chemicals, APIs. Now, that's the first part. On greenfield, on new build, you're seeing the Tata establish assembly plants here for iPhones. So those kind of things have started to happen. It'll pick up momentum, but it'll take a while.
Okay. Let's sort of wrap up with your outlook for the space, for APAC region M&A. What do you see as the big headwinds or challenges coming up on what otherwise looks like a pretty positive time?
So I'd say headwinds tend to be in a market this complex and large, tends to be more geopolitics than anything else. Now, as we are aware, some of that will have to play out. That determines how MNCs allocate capital, that determines where they double up on investments. So it helps now direct the flows in the M&A world. Second, I would say, is the uncertainty around the macroeconomic outlook. I think with the view that we are getting to the top of the interest rate cycle, that part is starting to feel behind us. Having said that, now, we haven't yet wrestled with inflation fully. And to the extent that now there is greater uncertainty around what the next year or 2 years might look like with disruptions driven off interest rate outlooks and other macroeconomic considerations, I think M&A might take a little bit of a step back, but I think we are more or less behind that now. I mean, in front of it now.
So the worst is behind us, you think?
I would think so.
All right. That's a great note to wrap this up. Thank you so much, Rohit, for speaking with us.
It's very good. Nice to meet you, Tamara.
Yeah.
Cheers.
Thank you.